Thank you so much. Great to be here. It's a privilege to be here. And from you coming from abroad, most welcome to Stockholm and most welcome to Sweden. Good to see you here. Allow me to start by saying just a few words about yesterday evening's news on trade from the US. First of all, it is regrettable, but at the same time quite expected. I think the Economist, the newspaper Economist, described it quite well this morning, saying that this takes America's trade policies back to the 19th century. A friend of mine was more precise, 1909 to be more precise. However, Sweden and European Union, we are well prepared for this. We are ready to retaliate if that is needed. Our preferred option is, of course, not to do so, but to negotiate a deal. We don't want to have growing trade barriers between our two continents. We do not want a trade war. But if this fails, the EU obviously stands ready with countermeasures as well. And the EU is a big trading power globally. This is not a threat, this is a promise. Our goal is, of course, not to go that path, but to lower tariffs and to increase trade instead, with the US and with other countries as well. The best way would have been a formalized trade agreement between the EU and the US. That potential existed just a few years ago. That door was closed at the time. But we have learned that free trade was actually what made us prosperous, and it did make the world a safer place. That's a path we want to walk also in the future. On prosperity, I would like to point to a building not far away from here in Gamla Stan, for those of you who have not been there so far. The Stockholm Stock Exchange was opened in 1863. At the time, it was one of the first of its kind in the whole world. We were early adopters already at that time. It was also a time when Sweden started its 100-year journey from being one of Europe's poorest countries to become one of the richest. There are, of course, several reasons to how we did this. An open approach to trade, of course, domestic and international, access to and a responsible use of our natural resources, industrialization and openness to rapid technological development, ambitious social reforms, and education for all, not only education for the few. Fully understanding that for a small country with limited home market, being innovative and being internationally competitive is key for economic growth. But also realizing that new ideas require access to capital and to investments. Because of this, Sweden today has a great mix of big companies founded more than 100 years ago and much younger but equally well-known companies at the forefront of technologies now shaping the world. We have certainly had, and we still have, a lot of pure inventors doing really new things. But even more, we've had, and we still have, entrepreneurs turning ideas into business, transforming these general purpose technologies to groundbreaking new applications. To keep and to develop this tradition is really a major policy ambition for my government. Doing so, in Sweden, we don't have the tradition of taking success for granted. As a country, you are never better than your latest achievement. That's why we will continue working to improve competitiveness in both Sweden and in Europe. Is the only way forward in an increasingly tough global competition and an increasingly uncertain global order being it in geopolitics or in, as of today, in trade. As we all know, we live in a very complicated world right now. There is an ongoing war on the European continent. How this awful war against Ukraine ends will be formative for European and for Swedish security for generations to come. The rules-based order that we have operated within since the Second World War is now on very shaky ground. Transatlantic bonds are being questioned. Economic growth is mostly happening in China and in the US, and free trade seems to be slightly out of fashion. As a consequence of all this, many now like to rule out the concept of Europe. I disagree. Europe and the EU is certainly not perfect, but we do have agency over our own future. Going forward, I would like to build on three important policy pillars. First, increase our immediate pan-European support for Ukraine. That means basically EU minus and EU plus. EU minus in the obvious sense that Hungary is not a part of the group. EU plus in the equally obvious sign that the UK is definitely on the same track. Norway is on the same track. Iceland on the same track. EU plus is a more important message than EU minus. The Ukrainians are literally not only fighting for their own freedom, but also for ours. Real peace can only be achieved through strength. A bad peace deal would be a recipe for another assault. Second, boosting our own military defense. In Sweden, as well as in all European NATO, we need to take a big responsibility for our own security. That message had come true for a long time. Although it's a new realization, the need has been there for a long. That should also mean an investment in continued transatlantic security cooperation. Last week, the government announced our plan to, in just a few years, reach a new potential NATO goal at approximately 3.5% of GDP. Strength is the only language I think President Putin understands. Third, increasing European competitiveness. Also a long overdue effort. Only a faster growing dynamic economy can safeguard resources for security, for safety, for the green transition, and for social welfare. Growth is honestly not a nice to have, it is a must have, even on our continent. At the last European Council meeting 2 weeks ago, we agreed on some policy changes. A growing economy requires capital and investment, and public funds alone will not be enough. We need private money, and private money can and should be funneled through well-functioning and deep capital markets in all of Europe. There is a great potential. More than 11,000 billion euros are today either in saving accounts in banks or in pure cash. I'm not saying at all that having a financial buffer is wrong, but I am saying that a bigger share of European financial assets could be put to work and should be put to work. Luckily, I believe there are some examples that could serve as inspiration for how to do this. And I admit I might be biased, but Sweden happens to offer a few of those answers. I like reminding people, not least in Sweden, of an article in the Financial Times almost exactly 1 year ago. The title was, and I quote, "How Sweden's stock market became the envy of Europe." I don't always get those reviews in papers in Sweden. The article goes through some of the features of our Swedish capital markets. Our high numbers of IPOs, remarkably high compared to other much bigger European countries, the high degree of retail investor participation, the high returns in the Swedish stock market compared to many of its peers. And I like telling Swedes about this article because normally it surprises them. Not the fact that the large share of our population invests in stocks and funds. They knew that. That was really not a surprise. The biggest surprise for many Swedes is that the rest of Europe is not doing the same thing. Of course, the Swedish capital markets and our culture of investing didn't happen overnight. Big changes normally don't do. It was built brick by brick, with the groundwork being laid decades ago. First, I should point to our long tradition of incentivizing retail investors to participate in capital markets. The first tax incentive to put some of your savings in shares and investment funds were actually introduced already in 1978. And yes, they were controversial at the time, but for quite a short period of time. By the early 1990s, roughly 20% of the Swedish population used the tax-incentivized allemansfonder, don't ask me to pronounce that in English, to save in investment funds. Today, we have the investment savings account, in Swedish known as ISK, introduced in 2012. They quickly became a true success story. And yes, they also were controversial for a short period of time. They are simple to use with close to zero reporting requirements. Taxation is beneficial as well as simple. Today, almost 40% of our entire population do have an account, investing a capital stock that equals to more than a quarter of the Swedish GDP. This government realizes the further potential of the investment savings account. As of this year, the first 150,000 kronor, roughly some 15,000 euros, will be fully tax-free, and the next year we are increasing it to 300,000 Swedish kronor. Second, I would like to point at the premium pension scheme, which is a part of the public pension system. 2.5% of the relevant income is automatically and compulsory directed to our individual pension fund, and every Swede is allowed to choose how to invest that money. All in all, total assets in the Swedish pension system corresponds to some 140% of our GDP. Mario Draghi, he concluded in his famous competitiveness report, and I quote, "These pension funds are also important funders of IPOs, contributing to creating a favorable climate for entrepreneurs and innovators." And I do agree. Honestly, it is difficult to see how the vibrant Swedish capital market could have emerged without mobilizing assets for pension savings. And this is the most important conclusion, I think, from the Swedish example. If there is to be a capital market, there must be a critical mass of investable capital. And the source for this capital is either people's direct savings or their savings through the pension system. Both needs to be put to work. Moving forward, that's precisely what we will keep doing, hopefully together with the rest of Europe. And now, in a quite formative phase for Europe and for Europe's transatlantic relations, there is a true momentum for reform. Which leads me to a few conclusions. As EU leaders and members of European Council, we must do our part. That's obvious. We must push ahead with actions at EU level where collective action is needed. And I do feel that there is this ambition in the European Commission right now. So should also our ministers in the Council, as well as members of the European Parliament, think right now. At the same time, and perhaps even more important, we must all commit to necessary national, domestic reforms. And that is much more complicated. There is always a risk in hoping for the EU to take difficult decisions instead of taking them ourselves. Taxes and pension schemes, they are truly national competencies. Governments must not be afraid to act on that fact. Reform is, as quite a few of you understand or know from personal experience, reform is complicated and quite often politically risky, but also desperately needed in Europe. And in hindsight, many tough choices actually turn out to be the right ones. Modern European history is full of failure, obviously, but also full of successful national reform programs. Look at the economic turnaround in Portugal, not least under Commissioner Albuquerque's tenure as finance minister. Look at the German labor market reforms of the early 2000s. Look at digitization in Estonia. Look at the 90s financial framework reforms here in Sweden. History tends to provide us with useful lessons for the future. If we keep doing what we always have done, we really should expect similar results as we always have got. On the other hand, if we do what others have already successfully tried, we might learn also from previous success. European nations have gone through periods of change and reforms before and have come out stronger and more prosperous on the other side. We could and we should do exactly that again. The European Commission's communication from 2 weeks ago is an important step towards reforming the capital markets. I'm happy that we are joined by the Commissioner here today, outlining the suggestions for the Savings and Investment Union, formerly perhaps more well known as the Capital Markets Union. Sweden welcomes the stronger integration of this effort into the European semester, and we are open to discuss also common European initiatives. Securitization, supervision, pan-European labels for products or accounts should be considered on their own merits. But let's not fool ourselves. Reform at the EU level only will not be the silver bullet, ensuring that European startups decide to stay and raise capital in Europe. It simply is not enough. Common supervision will not make that much of a difference as long as you lack sufficient capital and a well-designed ecosystem. So let's keep a few things in mind here. Financial stability is a precondition. A stable economy attracts companies. Self-inflicted volatility will surely do the opposite. We know a lot about this in Sweden, and other continents might learn that as well. Also, don't allow reforms to disrupt already properly functioning markets and practices. Apply the medical ethics rule. First of all, do not harm. Also on policy. Rather, find inspiration from reforms already proven to work. And if we want to increase financial literacy, it is important to let people make their own investment choices and learn by doing. Lastly, let's remember that our capital markets are only one part of a much bigger ecosystem that actually attracts investments to a country. Therefore, European competitiveness in a broad sense must stay at top of the legislative agenda in the EU. Making business easier and cutting red tape will attract investments. More focus on R&D and groundbreaking technologies will attract investments. cultivating a spirit of innovation, of entrepreneurship and risk-taking will also attract innovation and investments. I remain certain that also Europe could make it. Not overnight, not without effort or sacrifice, not only by talking about it, but by through and genuine reforms. 30 years ago, Europe made a great achievement in creating the single market. 30 years ago. 450 million citizens and countless and borderless companies constitute a big economic and trading power today. Now is really the geopolitical time to use that power and to build on what we have already once done. If the EU manages to reform while others either are banned from global trade or by themselves isolate themselves from global trade, then Europe will be a true winner. The world needs and the world deserves a kind of European renaissance, and Sweden will do our part of that job. Thank you so much.